Man, this ain't financial advice. Cardano poised for a massive breakout. We currently have 2,300 smart contracts locked in Cardano's ecosystem, ready to explode. And today, a little bit different, we review some of the greatest day traders of all times, all in this episode. Man, this ain't financial advice. So I was sitting there eating my meal, and I thought to myself, Tudor's application backend is here. 2,300 smart contracts are locked in queue, waiting to explode the Cardano ecosystem. What if I was to take my entire net worth and put it in to something like Sunday Swap? That could be a 10, a 20. I'd be set for life. I'd be set for life. And that's when you kind of have to step back and smack yourself in the face with a fish and say, are you mad? And it got me thinking. You know, I have a lot of friends who are traders, day traders, okay? And my one friend, he loves to try to convince me, Scott, you know, you're a trader. You made a trade. I'm not a trader like you, okay? If you guys follow this channel, you know I don't do a lot of charts because I think it's it's like trying to read hieroglyphics or smoke signals, more or less. Yeah, I look at the charts. It's interesting, but knowing the statistical probability of being a successful day trader versus the statistical probability of being a long-term holder, whether it's in the stock market or it's with cryptocurrencies or any kind of investment for that matter, the people who trade the most, they fade the most, okay? And yeah, I make trades here and there when it makes sense, okay? I also ride a bike every once in a while, but I sure as hell wouldn't call myself a cyclist. I can whip up a nice little fettuccine Alfredo once a quarter, but I'm not sitting here calling myself a cook, just like I wouldn't call myself a day trader or even a trader at that. I like to think of myself as a investor who diversifies his investments so that I can keep my money. That's the whole goal here. And I think we all have that little monkey in our brain that comes to you with tons of bad ideas that sound really good. You know, the little monkey comes to your brain and says, hey, I got an idea. You and me, we could be rich. We could show them all. Remember all those people who doubted you? Yeah. Wait till you see the look on their faces when we drive by them in a brand new Rolls Royce. Wait till you see the look on their faces when we pull up in a brand new Nortec Sport Fisher with 450s Racing Edition. Wait till that is an evil voice that you must silence. That voice is the reason why traders lose. Now, first, let's go take a look at, before we get into the trading stuff, let's take a look down here at the crypto charts. Folks, we got Bitcoin pumping up today at $64,366, Ethereum at $46.49, Binance Coin at $639, Solana $244, Tether at $1, and our boy Cardano, right about $2. Somebody said Cardano's partying like it's 1999. I got to agree with that. So Cardano's been trading a little bit sideways, but a lot of the other projects that I mentioned above, they've actually gotten some nice pumps. So to me, with where the Tudor application backend is and Cardano having 2,300 smart contracts that are waiting in time lock, yeah, the price might slide a little bit, but that's institutional major money market manipulation. Do not be fooled. Like, I am so bullish on this project. Click away if you can't get with the vibes, if you haven't done your research, if you're too busy watching Shiba go to the moon and that upsets you, Cardano's not the coin for you, okay? But take a look. We'll take a look at the chart here, okay? So if you look at Cardano over the last month, yeah, it's majorly gone sideways, and it took a dump right there, okay? 3 months. Guys, still holding pretty strong here at this $2 What is that? Oh, that's not right. Anyway, folks, what we have here is 2,300 smart contracts that are waiting in the time lock, okay? That's going to bring on things like Meld. That's going to bring on things like Sunday Swap. That's going to explode the ecosystem, okay? And then you still got simp-brained people out there like this, and I want to put her on the list of people who doubted Cardano, okay? Cardano's bullish stint already ended by Lavina Dariani. Okay, you should read this article because it's just, to me, complete garbage. It's like, girl, did you even come up with this yourself? Or did someone like propose this idea for you to write this? Like, what was the motivation behind this article? Like, it's complete nonsense to me. And the odds of this sleeping bull's awakening in the foreseeable future seem to be minimal. You just got into crypto. I highly doubt your experience, because then you read articles like this where we know that we have our Plutus application backend. We know that we have the most decentralized smart contract proof of stake blockchain on Earth. Okay, we have 2,300 smart contracts in the queue. What do you think that's going to do for, I hate to say, the price? Okay, and I'm not telling anybody out there to trade this. I'm just pointing out simple, obvious things. Like, her thing goes on all chart analysis. This, we have SingularityNet, we have Cardax, we have Liquid. Those are likely going to be pretty good products. And when those things ship, game over. I'm going to make shirts. I promise you all. I'm going to make shirts that say, Cardano, we tried to tell you. Okay? Put my face on it. And if this doesn't age well, it doesn't age well. But from my research, I think it'll age just fine. So, I came into this thing and I was thinking about the whole trading thing. And, everyone I know who's ever become a trader, they always all lose money. Can some people do it? Yes. Okay. But a cyclist is a good example. How many of your friends have been in the Tour de France? How many of your friends have been, let's just say, a record-setting cyclist or a cyclist that has won multiple events, just local events? Do you have any friends like that? I don't. Let alone the Tour de France. So take a look at this. This scientist did an article on trading. Scientists discovered why most traders lose money. 224 surprising statistics. Okay? And I'm not impervious to it. I've made trades too, but it's very seldom. And it's like when it totally makes sense. It's usually like the trade could last, years. And it's me taking my profit and principal out and moving it into something, diversifying it into something safer and smarter, so that I have a bigger, more cornucopia of stuff so I get to keep the money. Okay? Not jump in, jump out, double Dutch style. No way. I've done that. That's how you lose your dough. Okay? 95% of traders fail is the most commonly used trading related statistic around the internet. But no research paper exists that proves this number to be right. Research even suggests that the actual figure is much, much higher. This stuff just makes me laugh. I'm sorry. Because I push this to everyone. Guys, don't trade. You know what you should do? You should actually come and stake your Cardano with the nerd node. We're going to take a little pause here. Pew, pew. 13,000 into the nerd node. 10,000 into the nerd node. Block with smart contracts in it. In queue. 1,300 into the nerd node. 3,200 into the nerd node. 710 delegations in the nerd node. And I bet you the 710 people who stake and bake with nerd and join our Telegram community below and keep a level-headed mindset and don't do ultra-risky behaviors will turn out better than the people that do make ultra-risky YOLO Sunday swap calls. Just saying. Why? Because statistically, the greed is what ruins you. I want to do a whole series on just greed. It's the psychology of greed. I saw Jordan Belfort, the Wolf of Wall Street, someone who knows a thing or two about greed, says you can make a good trade. Like, it's possible. But what happens is that people, they start to think that they can make another good trade and another good trade and another good trade. And guess what? Their greed impairs their own judgment. Warren Buffett is so successful because he is the ultimate stake and bake. Okay? He just holds through the highs, through the lows. And being that he's been in the market so much longer than everybody else, he's outperformed pretty much everyone. But anyway, back to the video. So check out some of these statistics. In the following article, I'll show you 24 surprising statistics economic scientists discovered by analyzing actual broker data and the performance of traders. Some explain very well why most traders lose money. 1% of traders can profit net of fees, okay? You see this little chart. Only 7% remain after 5 years. 80% quit within the first 2. Okay, 40% trade only for 1 month. All traders start with the dream to get rich quick. Yeah, just like me when I was thinking I should YOLO that and I'll have tens of millions of dollars, or I'll have nothing, and all my smart ideas will vanish in a moment, in just a moment, and it will not be right back. So 80% of all day traders quit within the first 2 years. Among all traders, nearly 40% of day trade for only 1 month within 3 years. Only 13% continue to day trade. After 5 years, only 7% remain. Traders sell winners at 50% higher rate than losers. Think about that. 60% of sales are winners, while 40% of sales are losers. The average individual investor underperforms the market index by 1.5% per year. Active traders underperform by 6.5% annually. That's if you're getting 5% from Nerd, you might as well just give it away, okay? Because that's about a 5% difference right there, okay? Day traders with strong past performances go on to earn strong returns in the future, though only about 1% of all day traders are able to predictably profit net of fees. About 1%. Literally, a roulette table, because I was actually doing a small little comparison here, a roulette table, okay? I thought I had it up here. Let me see. Do I have it in the copy and paste thing? Oh, yeah. Roulette odds. Come take a look at this little gem, okay? So you have a better chance playing roulette. If you look right here, I was looking at this earlier, these types of bets have a chance of winning close to 50%. To be precise, even money bets have a 48.65% chance of winning European roulette and a 47.37% in American roulette. Americans always taking another point. The point is, no pun intended, is that if you're sitting here, you might as well just go to the casino and double down on the roulette table, as far as I'm concerned, okay? Because, look, if you are the man that broke the Bank of England, sure, you should go day trade. You should totally do that, okay? And you'd be smart enough to not listen to me, okay? But for the other 99.999% of you, you might just heed the wisdom that's coming out of my mouth, because I've been there, and guess what? I was not in the small percentage, okay? I was in the percentage of people whose brain said, we can do this. And guess what happened? We didn't do it. We did none of that. The opposite happens, okay? It always does. The market is rigged. It is. It's totally rigged. It's rigged even without insider trading. Traders with up to 10 years negative track record continue to trade. Now that is a fact that I think everyone should just cut a piece of that good meat off and just chew on it. This suggests that day traders even continue to trade when they receive a negative signal regarding their ability. It's just gambling. It's just gambling. See, me personally, I would quit because I go, wait a second. My trading has been so piss poor for so many years. I would have to become all of a sudden so incredibly good at trading to get my money back. I guess the gambler's mindset thinks like I've been such a loser for so long that my huge all-time record-breaking winning streak is about to be now. Let's do this. Honey, give me the debit card. Like, what? No. You got to know where your strengths are. You got to know where your weaknesses are. And you got to be realistic with who you are and what you're capable of doing. folks, whenever you sign up for these exchanges, I love that they always ask them, this is the most simp question. What is your risk tolerance, right? What is your risk tolerance? It's like very high, middle, low. and naturally every guy, just because it's probably an ego thing, very high. My risk tolerance is very high. My middle name is Danger. Danger Trader McGovern. I don't know where I came up with that name. But what I'm getting at is this, is that if you have a 7-year history of losing because you made bad trades, that would be a direct indication that your risk tolerance actually stinks. You were shaken out of things here and there, meaning your risk tolerance is not high. It's probably low to maybe moderate, depending on your losing track record. And if your winning track record, you're not watching this video because it doesn't really apply to you. You're watching, you're not watching trading videos. That's the other thing. So of this fraction, the fraction of people out there who make money trading, do you think they're on YouTube teaching you their strategy? I'm going to pause and let you think about that. Do you think they've come on YouTube to show you their thing? Or do you think that people make more money selling you trading courses than they do actually trading? Tell me what you think, okay? Because the reality is that they do, okay? Moving on. This suggests day traders continue to trade even though they receive negative feedback. Okay. Profitable traders make up a small portion of traders, 1.6% in the average year. However, these day traders are very active, accounting for 12% of all trading activity. That's very, very interesting. So if you're, and I hope the losers out there are, and I mean trading losers, not like you're personally a loser, but I hope the trading losers aren't going, I need to trade more now. With that statistic. I know how the gambling brain works. I got one. Among all traders, profitable traders increase their trading more than unprofitable traders. Time to increase. Baby, we better double down, baby. Woo! Triple down. Poor individuals tend to spend a greater portion of their income on lottery purchase, and their demand for lottery increases with a decline in their income. Investors with a large differential between their existing economic conditions and their aspiration levels hold riskier stocks in their portfolios. Well, that's normal. I mean, you say that for a lot of people in crypto too. Men trade more than women. Not shocked there. And unmarried men trade more than married men. Makes perfect sense. Poor young men who live in urban areas and belong to specific minority groups invest more in stocks with lottery type features. And you know, you could put crypto in that too. Okay? You could. It's not implausible. Within each income group, gamblers underperform non-gamblers. But people don't get that. They think they're going to be the man who beat Wall Street. I've got it all figured out. If it goes up, you sell. When it goes down, you buy. It's just that simple. The man on the internet told me the course because he's got a rented Lamborghini and a house from Airbnb. Investors tend to sell winning investments while holding on to their losing investments. That's interesting. Very interesting. Trading in Taiwan dropped 25% when a lottery was introduced in 2002. That should tell you something. During periods with unusually large lottery jackpot, individual investors' trading declines. Okay. Oh, that's interesting. Investors are, gosh, that's so sad. Investors are more likely to repurchase a stock that they previously sold for a profit than one previously sold for a loss. Makes sense. You're like, that thing's a stinker. That's when people get superstitious about their trade. That thing's a stinker. It's a junker. No, you just aren't a freaking day trader, dude. Like, it's not like the stock itself or the company isn't stigmatized because you bought and sold for a loss. It's just you, dude. And I say dude because obviously men make up the large majority of these great trades. I had a friend lose $2.5 million this year. Okay. This isn't funny stuff, but it's like, gambling is, it's like an addiction. It is an addiction, I think. Like it's like you can't talk to a trader. Like you can't talk people out of trading. Like they can only learn for themselves, I find. Like the more I tell people like, hey, like I personally wouldn't do that. It's like, I know where my risk tolerance is. It's super high. No, it's not. It's maybe moderate. I don't know. I don't trade enough to know. So the traders that I talk to, it's like you might as well be talking to like someone who's addicted to heroin. I mean, literally, it's akin to that. Like they just have that 1,000-yard stare, like in their eyes when you're talking to them about anything, because it's a short-term outlook. It's a short-term outlook. You're better off buying safe things that are going to last the test of time. By the way, Cardano was ranked the lowest on Fox. I think it's Fox Money News for least risky crypto investments, while Shiba Inu was the top one. Just food for thought. Individual investors trade more actively when their most recent trades were successful. It makes sense. You're like, I'm on a winning streak. I'm hot. Don't interrupt me when I'm hot. What is this? An increase in search frequency predicts higher returns in the following 2 weeks. Okay. Traders don't learn about trading. That's interesting. Trading to learn is no more rational or profitable than playing roulette. There you go. To learn for an individual investor. The average day trader loses money by a considerable margin after adjusting for transaction fees. Oh. In Taiwan, the losses of individual investors are about 2% of the GDP. That's ridiculous. What is the Taiwanese GDP? Taiwan GDP. Okay. So Taiwan's GDP, 689 billion. Okay, so 1% is that 6. Okay, so it's about $12 billion. Down the tubes. Yeah, the Lambo didn't come. Investors overweight stocks in the industry in which they are employed. That makes sense. Traders with a high IQ tend to hold more mutual funds and a larger number of stocks, therefore benefit from more diversification. Seems to be the most rational thing that I've seen here so far. So peep this article out. I just think it's loaded with a lot of good statistics that are going to show you like the real reality of what happens to most people trading. I was working in New York, and a couple guys after Corona came, because we weren't working anymore, they immediately became day traders, and they all lost their tail immediately. 50,000, 100,000, and it's gone. Okay. And then luckily, most of them are still not trading. Some of them are, though, which is, questionable at best. So let me go through this little thing right here. I saw this article, greatest traders of all time, the top 5 most famous traders in the stock market. So we got, there's our buddy George Soros, okay? Billionaire George Soros, also known as the king of Forex trading, or the man who broke the Bank of England, is without a doubt the greatest trader. But growing up a Jew in the midst of World War II and due to the struggles he went through, no one would have predicted his rise. Born Georgi Schwartz, his family had their names changed to survive the way and fly under the Nazi radar, making to England. Soros worked jobs as a waiter or a railroad porter before he graduated from the London School of Economics. This finally paved the way for him into the world of banking when he got a job at Singer and Friedlander as a merchant banker. Thanks to his father's help, he moved to the U.S. to work at a Wall Street brokerage firm. After several successful stints helping him move up the ladder at various firms, he decided to establish his own hedge fund in 1970 called Quantum. It is here where Soros rose to fame. His most important trade came in 1990 when he decided to short the British pound. A couple of years before the trade took place, Quantum kept buying the British pound and accumulated 3.9 billion pounds. In addition to this, Soros borrowed to bring the total pound holdings of the fund to 5.5 billion pounds. On September 9th, the pound began to fall. Oh, glorious. That is glorious. This prompted Soros to short all 5.5 billion pounds against the German mark on September 16th. The music stopped. So the day we know now as Black Wednesday, Soros managed to make $1 billion in a single day due to his trade. This caught the Bank of England in a corner, forcing them to withdraw from the European exchange rate mechanism. Boom. George Soros, love him or hate him, man's a trading legend. Who's up next? Oh, this one's a good one. Jesse Livermore. If there's another movie ever made on a trader, it should be based on the story of Jesse Livermore. Born in 1877, Livermore ran away from home to escape the life of farming, which he was otherwise destined for. Once he made it to Boston, he began posting quotes for a stockbroker as a 15-year-old. It was here that Livermore bought his first share and earned a profit of $3.12 with a capital of just $5. Not a bad trade, Mr. Livermore. He soon started making more money trading stocks than he was paid. This prompted him to leave his job and begin placing leveraged bets at stock prices. Jesse Livermore was so good at his trades that he was eventually banned from bucket shops where he placed his bets. He then began trading at Wall Street, but faced huge losses. You must note this. These, however, were not due to any mistake of his own. See, and that's a good point. He is known as one of the greatest traders of all time, Jesse Livermore, okay? But he still faced huge losses that had nothing to do with his own activities. And that's where, the fundamentals, the charts and all those things can indicate a massive run up. And all you need is one piece of news to completely trump every single thing that you're thinking, or the opposite. So these, however, it's a game of risk, my men, and your middle name is danger. These, however, were not due to any mistake of his own, but because the ticker tape the ticker tape was not updated fast enough. He finally got a break at the age of 24 when he converted 10,000 into 500 grand, dude. That was so much money back in 1907. You were like, you were killing it. By the age of 30, Livermore was making $1 million a day during the panic of 1907. Livermore was now at the top of his game, which made him a well-known elite. But despite this, he went bankrupt twice by 1950. Must note that as well. Following World War I, Livermore began buying cotton in order to gain control of the market. He had to be stopped by the U.S. President Woodrow Wilson. It was on Woodrow's request that Livermore refrained from further acting on cotton. This famous quote came into being when President Woodrow inquired Livermore on why he was trying to corner the cotton market. To see if I could, Mr. President. What set him truly apart was during the crash of 1929. It was here when the market crashes were not even known about. Livermore took huge short positions, taking his fortune to $100 million. This would have made him a billionaire today. This earned him the title, the Great Bear of Wall Street. And it's the oldest saying in the book. Bulls make money, bears make money, pigs get slaughtered, and pigs are greedy. So, what truly set him apart was his ability to bounce back to great fortunes despite having bankruptcies 3 times in his life. A little bit of a volatility in your life there, Mr. Livermore. Jesse Livermore, however, didn't survive his 3rd bankruptcy and died after committing suicide. Okay, so we have arguably one of the most hated people on earth here. Then we at least by a large portion of people do not like George Soros. Then you have this guy who went bankrupt 3 times, even though he's the greatest trader of all time, and then killed himself. Okay, what other cherry stories do we have down memory lane? Okay, well, I got Paul Tudor Jones. Now, Paul Tudor Jones, Bitcoin bull. I don't know. Take a cue here, people. Paul Tudor Jones was one of the world's leading hedge fund managers. Jones began his trading career as a clerk working for the biggest cotton merchants. What's this cotton thing? Eli Tullis in the 1970s. Unknown to many, Jones was fired by Tullis after he fell asleep at the desk after a night of partying. Paul Tudor Jones, you are a legend. Jones found his own hedge fund in 1980 named Tudor Futures Fund. I love when these guys name these things. They're like, it'll be called Tudor's Futures Fund. And everyone will come and throw money at us. Yeah, well, it worked for PTJ. PTJ, bro, in the house. What's astonishing to this day is that the fund managed to earn 100% returns during its first 5 years. What set him apart was when he shorted a couple of stocks before the 1987 stock market crash. So it seems like the large majority of these people were shorting. I'm just saying, okay? This earned him around $100 million. This also earned him the nickname Black Monday Prophet. Oh, that's a great nickname. That could even be a good name for a band, right? Black Monday Prophet. Coming to the Whiskey A Go-Go. Check us out. 5 years post this, Jones went on to become the chairman of the New York Stock Exchange. Today, Jones is worth over $5 billion and is also known for his philanthropic works through the Robin Hood Foundation. Jim Simmons, this guy's really interesting. Known as the world's smartest billionaire, the quant king. Jim Simmons is clearly in a class apart on Wall Street. Simmons, a well-regarded mathematician for his Chern-Simons theory, also broke Russian codes during the Cold War. Very cool. Simmons didn't enter the... Is that you guys buying the YouTube day trader course? Did you guys break codes, Russian codes during the Cold War? Simmons didn't enter the stock market until his late 30s. What set him apart from the rest was he was one of the pioneers to trade based on quant data analysis and pattern recognition. After setting up the hedge fund Renaissance Technology, Simmons made it his mission to avoid Wall Street brains. Wonder why. I wonder why. At all cost, at all cost, hiring only scientists and mathematicians. From 1994 to 2014, Renaissance Technologies Medallion Fund gave a whopping 71.8% return. You must be wondering why you haven't heard of Medallion Fund. This is probably because Simmons closed the fund to all outsiders except employees of the company in 2005. The rich get richer. And I bring it up and I make a joke out of it, but these people who start these hedge funds who have incredible track records when it comes to their trading activities and their investing activities, they start private funds. They don't go on YouTube and give you all the secrets. They don't exist. Those people rent Ferraris and, it's just a different thing, okay? Simmons is today worth $24.6 billion, making him one of the most successful and greatest traders of all time. Okay, these are not the people in the comment section below. I'm sorry. Okay, and I love you all. And it's not me either. It's definitely not me. I'm not breaking Russian codes on quant analysis. I'm just not. Okay, Steve Cohen, billionaire Steve Cohen, number 5, came from an economics and poker background. Oh, I like it. A gambling man. He entered the stock market in 1978 after securing a job at an investment banking firm, Gruntel. Must be German. Gruntel. Cohen started off by making $8,000 on his first day and eventually moved to make $100,000 per day for the firm. Boom. There you go. That's impressive. 100 G's a day, boy. Cohen left Gruntel in 1992 and opened his own hedge fund, SAC Capital Partners. Definitely heard of them. It was here where Cohen became known for his ability to make money under any market condition. And that is truly a very important statement because it goes back to the oldest cliche in the markets. Bulls make money, bears make money, pigs get slaughtered. Now, I know a lot of you are probably watching this video going, well, I'm making money right now. Mom, all my last trades were great. Yeah, that's because we've been trading a bull market in crypto, okay? A monkey could trade that right. But when the market goes down, when that inevitable time does come, which it will come, things go up, they do go down. It's just in the inevitability of how all markets work, okay? Then, if you're still making money then, and you don't get desperate and move it into something that's more high risk to get back the money that you lost and then lose even harder, and that's just a personal story, but a lot of people tell me they've done the same thing, then maybe you can say, I'm a winner now. But if you're only winning during the time when everybody's winning, you're just you would probably do the same thing just holding it, okay? So your track record isn't gauged as a day trader on 6 months or 6 weeks or a year. It's gauged on, based upon the statistics that we reviewed earlier, let's say 5 years. If you're still day trading in 5 years and your P&L is majorly profitable, more power to you, brother. Keep doing it, okay? And I guarantee you won't be selling a course on YouTube. You'll just do that. It's like the whole motivational speaker thing. Well, if you're so good at motivating people to, what are you actually selling here? So it's like, yeah, think about it. You got to give it the sniff test. If something smells a little funny, it probably is. It was here Cohen became known for his ability to make money under any market condition. By 2011, Cohen was the 35th richest person in the U.S. according to Forbes. Despite having a net worth of $14 billion, Cohen still works at his firm, and it is reported that 15% of his company profits are due to the operations performed by him. Think about that. The man himself is still at the helm. The captain is still guiding the ship because he knows he needs to have his finger on the pulse because everyone who works for him is not a genius, and he's well aware of that. And I doubt he's going on YouTube looking up the latest strategies. He's like, man, these course people keep ripping me off. No, it's not happening. It's just common sense, folks. And when I break it down this way, yes, it can be a little bit laughable. Folks, I used to live and work out in Los Angeles, okay? And one of the biggest businesses out there is the entertainment business. Well, a business that's just about equally large in size, let's just call it show business. And that business makes money off of people's dreams. I'm going to make you rich, kid. All you got to do is pay me. Or I'm going to make you famous, kid. I'm going to make you a star, kid. All you got to do is pay me. And guess what? Those people never get rich, okay? They actually never end up really working in the entertainment business. And it's kind of sad because it's like somebody will always come to somebody who's in a weaker position and they'll play on that person's emotions and what they want and their dreams, okay? And the entertainment business, made up of people who actually produce films, actually act in films, actually direct films, makes billions and billions of dollars. And the business of telling people they're going to be the next big thing on the screen, or they're going to get you in the doors with the producers and the writers and never actually do, makes just as much money, okay? And I just got to ask you, how would this be any different when you see these trading gurus trading courses? Do the math. It's not any different. It's exactly the same. Folks, I know this is a long video. I appreciate the ones of you who stuck around. If I don't see you, I'll see you on the internet. I'm out.
Steak with North